When people ask me what the goal of charting wealth is, I tell them it's something they've probably not heard, and that is to help you create your own virtual personal wealth fund. That is the end result of all the trainings that we have on charting, on options, on Heikin-Ashi candlesticks, price percent oscillator, you name it. It all comes down to the creation of a personal wealth fund. I'm going to get into that and share that with you. But as always, I always start with quotes. I love this. An investment in knowledge pays the best interest. Benjamin Franklin. Second, formal education will make you a living. Self-education will make you a fortune. Jim Rohn. Now, personal wealth fund, what is it? Well, it is the end result of being able to do everything that we teach you here at the channel. It is the secret sauce. It is the ingredient at the end of the road that pulls it all together and makes it special. Personal wealth fund, what is it? It's basically your own private hedge fund. Liquidity is the key to this fund. There are always going to be market crashes. Some may be coming sooner rather than later. But liquidity is what helps you get out of bad investments. It's what helps you get out when things don't go right, and particularly when crashes occur that can take every single thing you have. We also ask you to take into consideration trying to get yourself away from tax-driven decisions. How do you do that? Well, you talk with your tax attorney, your CPA, your financial advisor, maybe all three, or at least one of those, about self-directed 401ks or IRAs if possible. Self-directed, you're going to be the person, who ends up in the end it's your money. You do with it what you want. If you want it to be self-directed and you have the skill set, all the better. If taxable, we do have options for using covered calls, puts, and reinvesting dividends. But we don't just reinvest them willy-nilly. We'll talk about that a little bit. Why in the world, if you can read a chart, would you simply throw dividends in at just any time of year? No, you wait. You throw them in at just the right time and buy more of a good thing at a low price. Keys to the personal wealth fund. Charting skills first and foremost. My friends, if you cannot chart, you have no business doing anything. In fact, it can take years of technical analysis study, what we call charting, to learn how to do things the right way. Now, we're looking for weekly vertical crossovers up and down on our charts. We see those on our price percent oscillator. Lots of great training at the channel about that, but I'm telling you, you have got to first and foremost be able to chart. If you can't chart, you have no business doing anything, but you can learn to chart. Every day, 10 to 15 minutes, that's all we ask. And in fact, to run your personal wealth fund, you're going to set a virtual one up first to learn how to do it. And when you do that, you're going to spend the same 10 to 15 minutes a day filling it up with just the right things. Options Mastery is next. We have three courses we give for free in Options Mastery, parts 1, 2, and 3. If you subscribe at the channel, chartingwealth.com, for free, you will get an opportunity to take those. We offer them once every month or so. You just need to be a subscriber. You'll get a free invite, and you can take them. All that's free. Options Mastery, it is your force multiplier. Options are crazy wonderful. If first you can chart to help you grow your virtual account, you will practice trade that. You will see it work. You will see it happen if you dedicate a little bit of time every day and dedicate yourself to the knowledge. And what does a personal wealth fund actually consist of? In the end, it's going to be 5 to 10 ETFs and stocks that you are very familiar with, that each and every day, week, month, in and out, you are trading back and forth and growing. That's what you learn to do. Now, the requirement of each of these ETFs and stocks is that they be chartable, that they be liquid, and that they be optionable, which means options are available on them. All of those things are extremely important. Otherwise, they don't need to be in your arsenal. If you can't get rid of them when they are not working, or if the market goes down, you can't clear out quickly. That's a whole reason we never talk about mutual funds or anything else that's not liquid. We only talk about ETFs and stocks. ETFs trade like stocks. They can represent commodities. They can represent bonds. They can represent stock indexes, whole sectors, you name it. And they everything must be chartable. If you can't chart it, if it doesn't have discernible weekly vertical crossovers, my friends, you got no reason to even consider it. Initial accumulation phase. Now that may involve significant options trading if you start off with nothing, and you're going to practice that for many, many months, for maybe a significant amount of time until you develop those options trading skills. It's only possible with expertise on charting due to the risk. If you aren't able to chart accurately and you start trying to get into options, well, you're going to see it in your practice phase. It's just not going to work. But we have lots of good training. You're going to learn how to chart. And once you learn how to chart, the next thing you move into is practice trading options. But again, there's nothing wrong with slow growth and experience. Nothing wrong with you over the years taking that money, putting it back from your job, your 401k, your IRA, your Roth IRA, whatever it is. And again, just practicing as you go along, learning as you sock that money away. You don't have to rush. This is a long-term plan, as well as, at times, significant short-term plans. The stocks and ETFs. You must be experienced in charting each one. That means you've got to practice them for a substantial period of time. Otherwise, you have no reason dealing with them. If you don't know their personalities, how they work, you've not traded them multiple times, purchased and sold options on them, practiced trading those, then you got no reason to be involved. The options, as well as the ETFs and stocks, the options have to be liquid too. There's plenty of stocks and ETFs you'll see options on, but when you check the bid-ask, it's $3 or $4, $5, $10 apart between the bid and the ask. Anything more than a few cents, a quarter or so, it starts getting too big. You're not in a liquid option. You're not in a big enough ETF or stock. You don't have enough liquidity to make it worth your while. There also needs to be significant movement during the year. No utility stocks here, nothing that goes up and down $2 to $3 in a year, but something that does trend. And there have to be a reasonable number of weekly vertical crossovers in a year. Now guys, you who are with us all the time, you know that we tend to bring to you ever so often the weekly vertical crossover profit potentials for just this year as I record this program. Up through June of 2020, just the 4 ETFs we track, we have 9, 10, 11 weekly vertical crossovers, all of them successful, easy jumping in points. When the weekly vertical crossover occurs, that is when the price percent oscillator crosses over the red signal line. It's very easy to see. It's so easy to see, it's hard to miss. We can see it on this Q's chart where it crosses over going up at one point and crosses over going down. Very easy points to see where those occur. And where those occur, we have weekly vertical crossovers, and we have the potential of jumping into an up or down trade. Now, those of you say down, who wants to buy something when it's going down? That, my friends, is what puts are all about. Or an inverse fund such as SH, which is a single inverse of the S&P 500. PSQ, a single inverse of the NASDAQ 100. TBF, a single inverse of 20-year bonds. So there are all sorts of opportunities and possibilities for you. So we have to have a reasonable number of weekly vertical crossovers every year. And If you are particularly dealing with issues where you have tax considerations, or you just want a dividend, you want to hold on to something for a dividend, perhaps you were gifted a stock or there's something you really want to keep, then of course you want to receive a dividend for the stock that you're keeping so you can get that printing press opportunity. Now, the objective with a personal wealth fund is for you to create, manage, and grow the wealth in it over time. How do you do that? Well, you buy on a weekly vertical crossover going up. You let it go up and you learn the entry and exit strategies that we teach, and you sell and you bank that money in the account. Next, if you've got a stock or an ETF that perhaps you're holding because of tax purposes, because you get a dividend on it for any number of reasons, you want to insure through risky times. What are risky times? Well, those can be when you might have stock splits. Those are when you might have dividends that are paid each quarter. Going through warning season, earnings seasons, there's all sorts of times when you have risks and you want to make sure that you insure. How do you do that? Well, the printing press method that we teach helps. That is selling covered calls and using some of that money and perhaps other to buy puts to insure in case the stock itself or the ETF has a down move. And again, how do you know when things are going down? Well, we have that really handy weekly vertical crossover that helps us so much of the time see what's really happening. We don't pay a lot of attention to the financial news. We care about the thing that counts. And that, my friends, is price movement. Then you reinvest the profits that you make from insuring, from selling covered calls, from dividends on upswings. When you have that weekly vertical crossover going up, that's when you take those derived profits and put them back in, buying more of the stock so that it goes back up again, instituting your printing press method. What does all of this allow you to do? To build wealth consistently over time. Does it add up? Yeah, it adds up. It's like a money printing press. And you will see this as you get into it and as you create your first virtual personal wealth fund and you practice trade it. And you see how good you are and how good you can get. And you will go through it. You will learn. There will be a bit of a learning curve. But again, we're here for you. We're here every single day, 10 to 15 minutes. And if you really want to accelerate this learning, we are now offering, again, the Accelerated Market Mastery course. No more confusion. Master the charts. Not only do you master the charts, but we help you accelerate your learning. In just 3 months, we plan to teach you, it is our goal to teach you what might take you 10 years to actually learn. You will learn all of our options trading strategies to fully understand and utilize these wealth magnifiers, as we call them. We will teach you and help you create your own virtual money printing press using market ebbs and flows to print these virtual profits. We will work with you so that you can design and build your own virtual personal private equity fund based on your interests. You're going to start with what you have and you're going to grow that in your practice portfolio. The world is your oyster. We want to be realistic in our training. If it's not realistic, it's not worth doing. We want you to become a charting master, to learn to read the charts like a pro. There is a market crash coming. We absolutely believe that. We've seen the first pangs of it. We believe that where we are right now, as I record this show, is we're in this area. We have had the crash that originally occurred with COVID. We are in the recovery phase, what's called the return to, quote, normal. It's not really normal. It's called the bull trap. Usually the market, and again, you can go back in time to the 1929 market crash. You can go back to the 1880s. You can go to the dot-com bubble. You can go to the housing bubble. You will always see a bull trap. This is where everybody thinks it's a V recovery. The market typically recovers a third to three quarters, and then it rolls over again. We are expecting that to be occurring. So we want to be prepared for it. We do believe there is one coming, and we want you to be practice trading this so that you know what's coming and can see it and don't get squashed by it. Also, if you sign up for the program, we're going to give you a complimentary copy and complete instructions on the use of our Trader's Journal and working on our second book, Optionable Wealth. It will be coming out at some time in the future, and everybody who signs up for the course is going to get it. Going to tell you a little bit about how to sign up for that in just 1 second. Last quote: success is the sum of small efforts repeated day in and day out. Robert Collier. What is that for us? 10 to 15 minutes a day, following these charts, making sure that you are managing properly your virtual personal wealth fund, that you're learning how to use options, that you're learning how to chart the markets, that you're doing all you need to do to be a success. Now, if you want to know more about this accelerated market mastery course, we do have a very limited class size. If you are interested, we need to hear from you immediately. We will be closing the class out. It will be starting in just the next few weeks. It's going to be starting in July. So if you're interested, I do personal interviews with everyone who says they're interested. I make the decision on who I accept into the class and who I don't. If you're just not ready for it, we're going to tell you that. We're going to urge you to just keep training at the channel. But if you are ready for it, if you have the time to dedicate and you are properly motivated and really want to learn, well, it might be for you. Email us, cw@chartingwealth.com. I'm happy to talk with you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.